You're listening to the Creating a Brand podcast. I am your host, Alex Sanfilippo. In today's episode, I am interviewing serial entrepreneur Ben Chatraw. Since graduating from Harvard, Ben has started and sold many businesses and products and is now devoting his time to his latest company, North Avenue Capital. He's an entrepreneur capital investor that is focused on helping other entrepreneurs by funding their businesses. It's really encouraging to see an entrepreneur reach this level of success and give back in this way. He's looking at younger entrepreneurs and people that are where he once was and investing in them. So cool to be able to see. Ben and the team at North Avenue Capital use a 4-part framework for picking the right entrepreneurs and businesses to invest in. And today, Ben is going to share that framework with us. Whether you're looking for investors or not, this framework is going to help you grow both personally and professionally. If you implement these 4 steps into your business, you're going to grow a more successful brand long-term because of it. This is actually one of my favorite conversations I've ever had with anyone on this podcast, and it's an extremely helpful topic. I'm so excited about today's episode, so let's not wait any longer. Here's my conversation with Ben Chatraw. Ben, thank you so much for being here today.
Thanks for having me. Glad to be here.
You told me pretty early on when I reached out to you about being a guest that I would not have had access to you if I didn't play soccer with you at one point.
I don't remember saying it, but it's probably true, right? There's a brotherhood on the soccer field, and that's wherever you're at in the world. If you kick around, ball around, then you've got a friend. So.
Yeah, absolutely. I actually really appreciate the fact that you were willing to have me here at your office and to record this episode, because I know you don't do this too often. So
great to have you here.
I wanted to kind of jump into a little bit about what you do. If you don't mind just quickly explaining your company, just at kind of a high level real quick, so we can kind of decide why this is really important for entrepreneurs to hear and understand.
Yeah, absolutely. So I founded North Avenue Capital about 5 years ago. I'm a serial entrepreneur. Mm-hmm. I've somehow found myself in the finance space as an investor and building businesses. And North Avenue Capital, we've got a very specific mission. So we finance businesses in rural America, so outside of big cities, mm-hmm. with the goal of both generating a profit. We are a for-profit company, and we want to maximize risk versus reward, but also with the goal of generating jobs and growth in places that a lot of people don't invest.
Yeah.
So we work coast to coast all over the country, financing opportunities ranging from $1 million to $20 million in various industries, everything from real estate to entertainment, hospitality, really across the board, anything that's an asset-based industry.
Yeah, and it looks like you've done a phenomenal job. Actually, I was looking at your shareholders report maybe from last year. I think it was 2018 I was looking at. You guys are really taking names right now. It's very impressive what you guys have accomplished.
Yeah, we've got an amazing team. It's the first time of the businesses I've built where we've actually been able to hit the business plan. So
that's great.
A lot of work to go, but a lot of really good people that work here. So
yeah. And this is what I find to be most interesting when we're kind of going over what we would talk about. You have a 4-part framework for deciding if you're going to invest. Can you run us through that today? I think that'd be the most valuable thing for entrepreneurs to hear in the Creating a Brand community. I just know that would be very valuable for all of us.
Yep, absolutely. So I've sat on both sides of the table, maybe all around the circular table, from entrepreneur to investor, really across the board member. And so I've built businesses from scratch. Mm-hmm. I've run a hedge fund where we're investing in public markets, both building a business that was unique and then serving in an investor role. In this environment today, we invest in a lot of entrepreneurial businesses. So yeah. I have a heart for that. I'm an entrepreneur, and I like to invest in that space. And really, probably the most important thing that I took from grad school, of all places, about being an entrepreneur was this framework. So
okay.
Something that
so you learned this at school?
I sure did. I was in a class at Harvard Business School, and it was Bill Salmon's class. Bill is a world-renowned professor of entrepreneurialism. Mm-hmm. He was actually kind enough to be an advisor on my first business plan.
Oh, wow.
And really more than any other professor has influenced my thinking and style. And so this is his framework. This is nothing new. Not something that I created or invented, but it's something that I've applied across the board to every single investment opportunity that I've looked at really over the past 15 to 20 years. Wow.
So you've used this every single time. Like if it doesn't fit this model or framework, then it's not right. Is that kind of the way you look at it?
Well, this is the framework for judging and determining if something is a good opportunity to move forward in.
Okay. Wow.
And I've actually taken it and you can tweak it and apply it to different places in life. So it's easy to look at it through the model of a business plan, but I think you can also take it and apply it to, personal areas of life. And
I love that. So I love that. Business and personal, they mix a lot more than people are willing to admit, don't they?
Yeah, that's true. That's true. So I'll share it with you. I'll share the basis.
Oh yeah, let's jump into it.
There's really 4 components. So it's people, opportunity, context, and deal.
Okay.
And so people, opportunity, context, and deal. And those get tweaked a little bit based on the underlying opportunity that I'm looking at.
Okay.
Of course.
Yeah.
It's going to be different for a nonprofit than for a for-profit company. It's going to be different in a startup versus looking at something as an investment. But that framework, with a few tweaks, really does apply broadly.
That's great. Okay, so let's go ahead and jump into this. Let's start with people. What is it that you're looking at in the people? I'm guessing it's the people that are in the organization, in the company, or maybe it's in an individual at times, right?
Yeah, so this is incredibly important because I've found that the people are more than 51% of the equation.
I have the 4-part framework. Yeah. This is the 51%.
Yeah.
Everybody better be listening up right now. Yeah. This is the meat right here.
Certainly more. I mean, maybe 99% in some cases. But I mean, really, at the end of the day, when you're making an investment, it's the people behind the investment that are going to matter.
Absolutely.
It's the people that are going to make the opportunity work. And if you're looking at it from an entrepreneurial framework, there's no business plan where everything goes according to plan. In fact, I would say in most business plans, 75% of what you project is going to happen does not happen.
It's true.
And so as an investor, you're really at the mercy of the people that are behind the business. And there's various aspects that I'm looking for in people and that you should be looking for if you're an investor, if you're an entrepreneur and you're trying to build a business. There's some traits that you want to be able to communicate to external parties to show them that you're in this category of people that are going to make a business or make an opportunity work.
Yeah.
The most important is character.
Yeah.
That's
character. Everything's built on that, isn't it?
Right. I mean that's going to be your foundation, right? So if I'm in business with someone or if I'm making an investment in someone and that investment goes south, I want to know that I want to have confidence in the character behind the person. I want to have confidence they're going to have integrity. I'm going to have confidence that they're going to come and tell me the truth. I want to have confidence that they're not going to be fudging their numbers, but can have those hard, straightforward conversations. That's always a key piece to it.
Yeah, you know what? Actually, when I was early on in my entrepreneurship, if you will, I was doing some real estate investing. I had a mentor who told me, he said, Alex, never let your giftedness take you further than your character can. And that always stuck with me because in that moment when he said it was one of those moments where I just kind of played it off and didn't let him know. But deep down inside, I knew that my giftedness was carrying me a lot further than my actual character at that point in my life. I wasn't being even honest with myself in some ways. So it makes sense that the character, I mean, everything, it's character and integrity, right? It's all built upon that.
It's the foundation. And I've found that there's a heavy correlation between character and purpose.
Oh, wow. Okay. Explain that a little bit. I'd love to hear that.
Yeah. So getting behind the purpose of the person that you're working with, the person that you're potentially investing in, and understanding what drives and motivates them is incredibly important. I've actually found that if someone is primarily and principally motivated by profits, that's a red flag for me in terms of people. Now, of course, if I'm investing in a company or I'm looking at a startup business, I want them to be motivated by profits. I want them to be motivated by the scoreboard.
Right.
I mean, it's a for-profit investment. But what I've found is if that is the means to end, if that is the primary motivator, then it can lead to a pretty significant rift in character when things go wrong.
Interesting. So what is it that you look for instead of that as like a primary purpose driver, if you will?
It can be many different things, right? I mean, but I want to see someone whose life and whose goals are built around a greater good.
Okay.
Something much more.
Wow.
Something much more powerful. So for me, in my life personally, my faith drives a lot of things that I do. Right. So I believe there's a God, and I believe in Jesus Christ, His Son, and so I want to do things in my life and through businesses that align with those purpose.
Yeah.
Doesn't exclude it from being a for-profit firm. It doesn't mean that I'm preaching on the corner, but hey, that's a purpose that I want to pursue and that I want to align around.
Yeah, and I'm with you on that 100%.
And so that purpose can be in many different verticals. Here at North Avenue Capital, we're able to attract incredibly high-quality talent because not only are we profitable, but we have this purpose of investing in rural America. We have a mission to help the economic growth of communities that need access to capital.
Yeah.
And so the reason that purpose is so important in the founder or the individual we're investing in is that it is going to filter out to the rest of his team. It always starts with the leader.
Yes.
And the people that are brought on that team are going to align with that purpose.
Yeah. I've seen some people that I know that have started businesses and they've done well, but profit was their primary focus, and they started hiring staff. I find that those companies and those people tend to be the ones that have somebody that will branch off and start their own competing business because they have the same mindset. It's all about the money. It's all about that profit at the end of the day. And they develop a bad culture because of it. So I've seen what you're talking about in action, that it can be very dangerous if that is your absolute primary focus. I think it's great that you guys, not only your company, but the companies that you're investing in, you're looking for that same thing.
Yep. The second most important thing I look for as it ties to character is perseverance. So the concept of endurance and perseverance and is so key in the entrepreneur world. Everybody on the outside in looks at entrepreneurs as a sexy business to be in until you're actually in it.
That's what I was going to say. Yes, it's so true.
It's what everybody wants to be until you're actually doing it, and you're at that stage where you realize that you're not going to be able to pay yourself for 6 months because there was a fundamental change in the business, or you underestimated something in your business plan, and you're having those hard conversations with your wife around what the world would look like if you were just working at the bank down the street.
Right.
And so being able to persevere is key for a successful entrepreneur. Mm-hmm. I think that's key for anyone successful in life. I mean, we're going to hit headwinds, but having that ability to last and to stay focused is, incredibly important.
Yeah. How do you identify that in people?
Sometimes it's based on experience. Mm-hmm. One rule for an investor is you never want to be the first, and so you want to look and see what they have experienced in life and in business. Mm-hmm. You always want to learn on someone else's dime as an investor.
That makes sense.
Right? And so some of that can go, back to even as far as education and classes that they took. It can go to the jobs that they had, and, it could go to the base. I mean, I'm thinking of a great entrepreneur I know that paid his way through school by working as a janitor. Mm-hmm. I look at that and I say, that's perseverance.
Yeah,
that was motivation, that's purpose, that's perseverance. That's someone where when the ship starts to sink, he's not just going to bail on the ship and go find more capital somewhere else and try to do it again.
Right.
We were talking about it before.
Yeah, but say it's behind you. You have this giant flag that says, "Don't give up the ship."
That has been a calling card for 15 years now.
Wow.
It was a motivator in the first business I started that was thundering into the ground as fast as it possibly could.
Oh, really?
With investors demanding their capital back. And frankly, it would have been easier for us just to wave the white flag and try to start again. As a good entrepreneur, we said, this ship is going down, I'm going to go down with it.
Wow.
I'm committed to it. I'm committed to the vision. I'm committed to the people around it. And, fortunately, that business was able to clip the treetops and, emerge from that and ultimately end up as a success.
That's great. I'm looking at this flag again because it's probably the biggest thing in your office here. Don't give up the ship. I think that's fantastic. And for anyone who's listening that's in our community, that's what we do that a lot together. We persevere together because I understand it gets difficult, and that's when we have to kind of get together and just encourage one another because it can get difficult. And you as the investor, you're not the guy necessarily encouraging them, but I'm sure that most people that have persevered, they have someone in their corner who's with them, who's helping them along the way.
Yeah, absolutely. Absolutely. As we move sort of through the characteristics of people, those are the core, those are the first things I'm looking for. But also skill set, experience, knowledge, sort of what I call the tactical. Mm-hmm. Do they understand the market that they're in? Have they acted in that market? Another key element is what's their reputation within their community? What do the people around them think of them? Mm-hmm. People that have interacted with them, people that they have led. Are they realistic? I mean, this is a key. Many times entrepreneurs are visionaries.
We have big eyes, don't we?
Visionaries, right?
Yes.
I think we all are to some degree, but are they realistic in their expectations in terms of what they can achieve?
Yeah.
If they're over idealistic, then that's a huge red flag toward the likelihood of success there.
Yeah. No, that makes a lot of sense. I have another kind of question along with that. Is credit score, like individual credit score, something that you actually look at? Because I hear a lot of investment companies and banks that are really, that's the first thing they want to see. Is that something that you do as well?
Absolutely.
Okay.
100%. I mean, if you're not paying your bills, how likely is it that you're going to be responsible to pay off a loan to your company?
That makes sense.
So that's a quick check, and There are circumstances where, the justify, reason for a bad credit score that can be explained. So it's not an end all to an end all.
Right.
But it's a very quick and easy check to understand how people, to understand the underlying character and see if you need to dig deeper there.
Right.
Credit score is important. Another thing that we do around here is we do leadership assessments. And so we use an executive coach and some tools he's given us. So anyone that we are investing in, both externally as a potential new business that we're going to finance, and even certainly within our own walls, we take them through a very defined leadership assessment to understand where they're at and what their skill set is.
Wow.
And is their leadership profile one that is good for the position they're in?
Yeah.
There's underlying characteristics of your personality and who you are that say, hey, you shouldn't be a business operator, you should be doing something else. Well, again, not an end-all judgment, but something certainly we'd want to understand.
Oh, it's an indicator for sure. And I understand that. Yeah, I'm big on doing these personality tests. Even if you're not looking for an investor, just in general, it can teach you a lot about yourself, I've found. There might be some skills in there that you don't realize are in there because you haven't really spent the time to develop them. But if they're naturally there, you'll find it pretty easy to develop those a little further, right?
Yep, absolutely.
Yeah, that's good. So so far we covered behind the people, which you're saying is at least 51% of the equation here is character, perseverance, and tactical is kind of this last thing we just discussed, which is a kind of a branch of things. Is there anything else under this category? Is it?
We could probably talk about people all day.
I'm sure.
And the key elements.
Yeah.
But I think the audience here, your listeners, probably get the drift of that.
Yeah. So everyone, once again, this is the most important part. Rewind it, listen to that again, and keep on going afterwards. If you're creating a brand, whether it's a personal brand through a blog or influencing on social media, or a professional brand with a product or service that you're offering, the Creating a Brand community is for you. We are your digital mastermind or tribe. Our community is built on our own custom social media platform where we share our experiences, recommendations, and solve real problems together. In addition, all members have exclusive access to our many online courses. Ultimately, we are a powerful community of entrepreneurs that are helping each other succeed. You will always go further in life and in business when you're part of a healthy community. I'm so passionate about this that I'm going to ask you to do something for me right now. Visit creatingabrand.com and join our community today. You can start for free and it will take you less than 3 minutes to set up. Once you join, message me directly. I'd love to have a conversation with you and welcome you to our community. So the next portion here, we're moving on to opportunity, was the second thing you said, right?
Yep.
Okay.
So opportunity, now we're looking at the actual business venture. We're looking at the customers. We're looking at the suppliers. We're looking at the capabilities. We're looking at the products. Here's where you're even looking at how are things priced. What's your cost of goods sold, or what's your underlying cost to build what you expect to come out with, and then what are you going to be able to charge for it in the market.
Is this the Shark Tank side of things that everyone's probably used to seeing on TV, right?
Probably a little more.
Yeah.
A little more.
Yeah.
I'm not sure our analysis or my analysis would match up exactly.
We don't need to get into the reasons why, but
with that group. But this is the engine behind the business.
Yeah.
This is the business opportunity itself. So we've looked at the people and we say, okay, independent of the people, is this an opportunity worth pursuing?
Yeah.
Is this someone that is disrupting the market, or is this someone that is providing an additive service to the market?
Mm-hmm.
Is there adequate space for this new product within the market that they're entering? And how big is that? What is the market size?
Right. Have you ever had anyone come through that's like, I want to use the term again, serial entrepreneur, but somebody who's basically developed something just new or so innovative that there's not really a way to check too deep, but you just have been able to see it as a product that's going to be a game changer? Has that ever come by, or has that ever happened with you guys?
Yep. And of course, the challenge with that is when you have something that doesn't have a market, that's inventing the market, that is such a game changer, is separating the wheat from the chaff.
Right.
It's very hard to figure out which ones are going to work, right?
Yeah.
A great example of that would be, Segway. We look out today and we see, 1 million scooters on the streets of our big cities.
Right.
That's what Segway wanted to be.
Yeah.
When Segway entered the market, everyone said that's going to be the game changer. Well, it turned out it was the cheap scooter in the Uber application.
It's crazy, isn't it?
That took over the world. So it's much tougher to distinguish that up front. And so as an investor, particularly in the space that we operate in. It may be different in the venture capital world, but in an investor, I'm going to want to be able to at least quantify what that market is.
Yeah.
And of course, I'm going to want to know that the entrepreneur or the owner of the business is able to quantify its market.
Yeah.
If you can't do that, and you're not able to, to quickly point to some of the things I've talked about, the pricing, the supply, the demand, the customer base, how big the market is, what percentage of it you think you can capture, you can't point to those things. You're not ready to take on outside capital.
Wow.
You're not really even ready to move forward with your business. You're throwing darts against the wall and guessing.
Yeah. No, that makes a lot of sense. Wow. Okay. So the opportunity obviously is something that's less on the individual, more on you guys really to evaluate that. And for somebody who's coming to you guys saying, hey, I need some money here to grow this thing, they really have to understand what they have and what they're doing.
Well, and I would say it's a two-way street.
Okay.
So I would expect, if I've got a business idea and I'm building a business plan, I'm going to have a business plan that clearly articulates the opportunity.
Yeah.
And I'm going to expect that from whoever I'm talking to, across the table.
Yeah, of course.
Likewise, we're going to take that opportunity set and we're going to evaluate that and determine how realistic it is.
Mm-hmm.
So, one of the things I learned in the hedge fund world that I've now applied to pretty much all segments of life is this concept of a gap between perception and reality. And so I ran a hedge fund for 7 years with a partner, and our investment mantra, our investment key, we're looking for opportunities where the market perception was in one place and the reality was in another. And when that happens and those begin to separate, eventually they have to come back together. And that's how you make money in a hedge fund. You find those opportunities in an equity hedge fund. You find the opportunities where the market perceives them as X. The reality is Y. And then you figure out how to put positions on so that when those emerge together, you make money.
Right.
The same thing applies in so many aspects of life. It applies in relationships. If your perspective of your relationship with someone is different than reality, it is eventually going to lead to disaster.
Yes, it'll catch up to you.
And it applies here in market opportunities.
Yeah.
If an entrepreneur's perception of the reality of a perception of the market that he's targeting and what the opportunity is significantly different than reality, then those worlds are going to crash together and it's not going to be good.
Yeah.
Not going to be good.
Unfortunately, I've seen that a lot, though, because a lot of entrepreneurs, and they should be passionate. So when we kind of say that first, they should be passionate what they're doing, but they've kind of gotten so passionate, so into the product that they lose focus of what the reality of it is because they're just so happy and excited about what they have in front of them. And sometimes it's not the opportunity they think they have, or it doesn't have the potential that they think it has. And I've seen that a lot. So you're having to evaluate that and really make someone be real. So for our entrepreneurs out there, get real with what you're doing, with what you're building. Sit down and really think about it, not from emotionally detached from it, so you can actually have a logical understanding of where you're at, what the potential is with your business. Ben, am I right in saying that that's a good thing for someone to do as they're getting into a product or a new market?
Absolutely. So market research and reasonable sounding boards from people in that space that are around you are critical.
That's good.
You need outside people to help you evaluate those ideas and understand the context. So very, very difficult to do that in isolation.
Yeah.
Nearly impossible for someone to do it by himself.
Right. That's great. Let's talk about the context now. Your third point here.
Yeah. So, the context, all these are important. If I had to say one, if I had to identify one which is the least important in terms of my view of things, this is probably it.
Okay.
And maybe that's because I'm a classic entrepreneur. But a context, think of that as all the things that could impact the business that the business owner or the business entrepreneur wanting to found the business can't control. So this could be things like regulatory environment. It could be things like trade deficit with China. It could be interest rates. Outside parties that can interface within the market that they can't control. So it's the wide risk of the context that's surrounding things, and factoring that into to the overall business plan.
Yeah. Okay, and that's somebody has to take, that's more due diligence on their part, trying to figure out, because you can't necessarily anticipate all of that, but some of it you have to say, okay, there's some potential things that come in and threaten the business or the concept that we have here.
Right. So the thing that I want to hear is that the owner, the founder, the business entrepreneur has thought about ways to mitigate those risks.
Okay, yeah.
You can never, ever, ever eliminate risk.
Of course.
To some degree, you often can't control risk. You can't control the timing of risk. But I want to invest with people that are reducing risk.
Yeah.
And you reduce risk by mitigating it and by planning on it.
Yeah.
So no, we can't predict exactly when the market is going to fall or, when a recession is going to hit. But what is it you as a business owner who is, either asking for capital and trying to grow their business, what is it that you can do? What is it you can put in place to show that you've thought about that in advance? And should those risks come down, you've mitigated that.
Right. I think a lot of what we're talking about here is what I'm going to try to say this word, but I always struggle with it. A entrepreneur versus an entrepreneur is one of the ones that can actually say, here's the potential risks and here's what I'm doing about them, or here's what I could potentially do about them. I think that people that can do that, they're the ones that shows me immediately that's a serious individual who's actually taken the time to think about what are the potential threats coming up in the future that might harm what I'm doing today.
And people that have thought about them in advance are going to be much more likely to be able to do something when they hit.
Absolutely, yeah. It's anticipation, right? Being able to anticipate what's going to happen. It sets you up for at least a lot more opportunity to succeed than fail when something just blindsides you.
Yep, you got it.
So the last point here is going into deal.
Yep. So the deal, again, this is going to vary the most according to the application. If you're a social entrepreneur and you're launching a nonprofit, well, your deal is not going to be the amount of money that you make. But if I'm an investor investing in a new business, new opportunity, the deal for me is what's my risk versus reward.
Yeah.
How much money am I going to be able to make on this investment for the risk that I'm taking? And so again, this is incredibly important for an entrepreneur or a business founder, business owner seeking capital, for someone starting a business to have their hands around. What does the overall risk look like, and then what could the potential reward be? Now, every investor knows that every business plan presented is going to have a hockey stick on its financials.
All right.
So everybody knows that that entrepreneurs are going to be optimistic about their earnings.
All right.
And every investor is going to discount that. And every entrepreneur that's done it before knows that every investor is going to discount that. So you end up with this incredibly vicious cycle.
Okay. So you have to plan for it if you've done this, right? So as an entrepreneur, you have to say, all right, I know that they're going to discount this, so I need to add a little bit extra there.
It's a vicious cycle that ends up with a curve that looks like a hockey stick.
Okay.
And so, to be frank, I put very little weight in the forward financial projections that I see, even for a startup business. I know that those are going to vary. Those are going to vary greatly.
Yeah, you do look at profit margin then, or what is it that makes it a deal that's worthwhile? What would make it worthwhile versus not?
Sure. So it is always the risk versus the reward.
Okay.
And so I'm always looking at what is the likelihood that I'm going to lose all of my money in this opportunity. That would be catastrophic risk. Or, how does it look if things go bad? Is there still potential that I'm going to be able to get my capital back? Perhaps I'm not going to get the returns that we projected, but is there a reasonable chance that even if things go bad, I'm going to be able to get my money back?
Right.
And so that can be managed in various ways. In our business, we often do it through collateral. If we're financing something through debt, then we're looking at the underlying collateral, and we're thinking and believing that if something goes bad and the business isn't able to perform the way that the owner projects, then there's going to be collateral that backs that, and we can see financial recovery. But it can also be done through the structure of the investment.
Okay.
And this is something that I believe in, and this is the way I've structured most of the deals that I've funded with outside capital. If I believe in my idea, it is critically important to me that my investors at least get their money back.
Yeah.
And so the deals that I try to structure them such that if I'm right and the business takes off, then there's upside reward for me. But if I'm wrong and the business only putters around or doesn't make, well, I get very little or nothing, and the investment base gets their money back, and then a reasonable return. And so, in the world of private equity or finance, you can do that through a high preferred return. You can ensure that the investors get 6%, 8%, 10% back, 15% annualized before you take everything. And then in doing that, you can capture more of the long end tail on the upside. Yeah. Investors are willing to give you a greater portion of the pie in the long run. Yeah. If their upside is invested. The deal, again, in the world of finance and entrepreneurs and startups, it's a little bit easier to define. It's risk-reward ratio, the overall structure of the investment that's being made, and ultimately it's how much money do I believe I can make versus the risk that I'm taking. Yeah. But you can take that same framework and you can apply it into many different verticals. And so I briefly mentioned, the nonprofit world.
Yeah.
But applying this, in the nonprofit space is just as important. If I'm trying to build a charity that is, trying to serve some social justice, the same framework should be there. For the money that comes in, what's going to be the outcome? What's going to be the reward? And so the concept of this deal, it can apply across the board.
Yeah, no, it really can. That's interesting. Yeah, I was actually going to ask that about nonprofits. I'm like, all right, they're not bringing in profit, right? So what does that look like? But it's actually the reward of the impact that they're having on that social movement, whatever it may be.
You got it.
Yeah.
You got it. And so, it may not be as tangible, or it may be. It may be a measurement of, how many lives were saved.
Right.
But it may be something that's less tangible that you can't mark on a scoreboard. Either way, it's still an incredibly important framework to have.
Yes.
Because otherwise, if you're not evaluating some sort of scoreboard, why are you doing it?
Yeah.
What's the end goal of it?
Right. That's good. Now, if an entrepreneur, let's just say that some of our listeners, I know that they're in this boat, they have a product idea or service idea, they are just getting started. When should they start considering this framework, people, opportunity, context, deal? It's from day one, right?
From day zero.
Day zero, okay.
Even before that, as the idea is mulling in their head, it's the first place to go. And my recommendation to them, it would be go and read Professor Solomon's book. Very short book. It's a very short read, How to Write a Great Business Plan.
Okay.
And it's available over Harvard Business Review or on Amazon, and it will serve as a great base to begin developing the thinking.
Yeah, we'll definitely put a link to that in the show notes. That's fantastic. I kind of want to just circle back around to this last question here that I'm asking. Even if people aren't looking for an investor down the line, if they think they've got this themselves, maybe they've got some money saved up, this is still an important framework to apply. And I just kind of want to stress that this is something that you can use to achieve long-term success by using this.
100%. I mean, even if you're not using an outside investor, in my opinion, it'd be very foolish to go without some framework of a business plan.
Yeah.
Perhaps it's not a formal written document. Perhaps it's your own internal notes. But it's foolish not to step back and think about these things.
Yeah.
Again, what you present and the context may change a little bit. The deal is now your time, your energy, your money, your investment.
But it's
versus
still the deal,
right? But it's still a deal.
Yeah.
You still want to evaluate that versus the risk and the opportunity cost that you're taking and establishing. So, yeah, 100%.
That's great. So going back over it again, that's people, that's you, yourself, the opportunity that you're going to have, the context, and then the deal itself. Ben, this was super helpful today. Thank you so much for being a guest.
Thank you for having me. This was a lot of fun.
People, opportunity, context, and deal. These are the 4 things that Ben mentioned in this episode, and I want to highlight one of the 4 right now, which is people. The person behind the brand makes up more than 51% of the value. This is another great reminder that you truly are the brand. And that leads me to a question. What are you doing to develop and educate yourself? I noticed that a lot of creators begin investing heavily in marketing, products, and infrastructure, which are all very important, but it's not the most important thing as you grow your brand. Again, what are you doing to invest in yourself? Becoming better, making yourself better is the most important thing you can do for your brand and your future success. So I want to mention a few ways you can begin investing in yourself today. First off is to subscribe to podcast. Creating a Brand podcast is my recommendation, but find some podcasts that are good for you. Enroll in online courses on a topic you need to learn about. I encourage you to go to creatingabrand.com and check out the list of courses that we have as well, but find the ones that are really going to add the most value to you. Attend seminars, hire a coach. These are some other things that you can do, and the list could go on and on. But the point is, never underestimate the power or the effect of investing in yourself. Ben, thank you again for this helpful episode and sharing your framework with us all. This has been so valuable for all of us today. Thank you again for that. For show notes from today's episode, visit creatingabrandpodcast.com. And also want to give a quick shout out to everyone who's been sharing this podcast. A lot of people have been helping me spread the word, and that means a lot to me personally. Just from me as an individual to an individual, it's so great hearing this is helping people and changing lives. I look forward to continue to be part of this in future episodes. So thank you as always for listening. I'm looking forward to being back with you next week.